Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, September the 7th, Labor Day. The year's 2020. Let's talk trading. Seeing dots, part 3. Here's a disclaimer. One of the hardest things about trading is actually following the plan. You know, we talk about brain management a lot, but it's difficult sometimes because we have these minds and they play tricks on us. Our brains play tricks on us. And we see things that aren't there sometimes, and we don't see things that are there sometimes. Our emotions can get in the way. Sometimes ego gets in the way. And, you know, the thing about the dots is it's just that it's really so simple. And if you just follow the dots, as I like to say, you can have profitable trades. You can have very profitable trades. So you just have to remember, though, that, you know, your results may differ from mine. You know, that's all in the disclaimer. So I set up a little chart here. And here, let me put the indicators up. Now, these down here, these will be going out in the next donational batch that I should get out this week. But these aren't donational indicators, but um, I usually get them out to the people who donate first, and then maybe a month later or so, I'll post them over on Crestlick, and other people have access to them. So the mid dot indicator, this is the one on the chart, and then the 3-level ZZ puts out the 1, 2, and 3 balls. Now, you can see I've got some multimeters up. I've got the candle color. I've got the regular previous mid, and this will just be if the price is above, if the closing price is above the previous mid, it'll turn green, and if it's below, it'll be red. But then I also have the open previous mid that tells you whether or not the open was above or below the previous mid. And that's part of following the dots. So you can see here, and I'll just bust myself. Right here, I took a trade. I think it was here. And I went short because it opened below the dot, and this one closed below. So I took that short. And you can see I took a little heat, but I really wasn't worried about it. It didn't go above the 3 ball, and then it came back down. But right here, I was up, I think, 1.5 or 1.7 pips, and I didn't take it. And then as I'm experiencing the heat, I'm thinking, you know, I should just take those pips. And so then I got another opportunity. But then I'm thinking, well, I should just trust the dots. And so what's happening is you can see I'm alternating my thoughts as opposed to just saying, you know what? I'm going to stick in the trade until price closes above the mid dot and opens above a mid dot. So what I did was, of course, I think I got out here because um, it put in a 1 ball. And as soon as I saw the 1 ball, that's one of my rules. I jumped out. But I was supposed to be following the dots. And I didn't. But you can see here, had I followed the dots, I had an opportunity right here because this one opened above, closed above. I could have picked up just a couple of more pips. Now, you know, no big deal, right? But the thing is, it just shows you what your mind can do when you're in the trading, when you're in a trade, and you then start altering based on what you see. Now, sometimes that works, and sometimes it doesn't. But what'll happen is if you don't follow your plan, you're setting yourself up for some rogo, regret of getting out. And you're going to have some romo, regret of missing out. And so, you're alternating sometimes between fear of missing out, fear of losing out, FOLO, and then the regret. So you have to get that under control. You have to be that trained monkey and just do what you say you're going to do. Maybe you have to put a big post-it note on the screen. Maybe you just have to follow what the indicator says. So, whoa, time to turn the battery on, or the power pack on, I should say. So here you can just see you got a couple of triggers. Let me talk about those indicators. So we've got the previous mid open history, which basically is the same as this, and then the previous mid history, which is the same as this, but you can see you get your history bars. Now, what the history bars do, they're not really for trading, but what they can do is they can give you confidence to stick in the trade or to enter the trade. So you can see so for example, if you have a flip-flop and something, let's see. So right here on this bar, we had to open above, but you see we had a close below. So it flip-flopped. And then you had to open below. It flip-flopped again. So if you had entered that trade right here on that flip-flop, you see you could have stayed in from to here, to here, to here, to here, and then here you got a flip-flop and you exit. And now here you've got, they both flipped, and so had you entered the trade right here, open above, once again, it would have moved in. And you had the two ball here, which could have given you even added confidence to jump in the trade. And right here, it's just basically telling you what to do or which bias you should be. And this is on the 5-minute chart. Now, the other indicator I have is the training wheels right here indicator, and I have the 3-level off, but you can turn that on. And what that'll do is it'll tell you use 3 levels easy true. It'll let you know, it'll tell you what the signal is based on the 1, 2, and 3 balls. And this is just the exit playbook indicator here. But we're just really focusing on following the dots. Now, I was talking with Walmall because I was let him test out some of the code. And he told me he looked at it on a 30-minute chart, and he says the flip-flops seem to work really well. He says sometimes you take a little heat, but for the most part, they seem to work pretty well. So, for example, here you had 2 reds, then all of a sudden the open was below, but it closed above. Here you had to open above, so it flip-flopped here, flip-flopped there, jumped in. Once again, you had an opportunity to take some pips off the table. Now, somebody could say this is Harry hindsight, and you know what? I don't care. Fact of the matter is you can use these indicators in the moment. They don't repaint or any of that nonsense, and which most indicators really don't repaint. They're in the moment. So you can just see here what happens when you follow these dots. So I hope that helps a little bit more. If you have some more questions about the dots, and like I said, if you donate it, these indicators will be coming in the next batch. Now let's just go through the charts here. Okay, remember, don't lose any more in one particular trade than you're willing to lose. Get your head in the game. And in fact, Walmart wasn't trading today because he said his head wasn't in the game. He wasn't really feeling it when he woke up early this morning. So he said he went back to bed. And then I saw something and I called him. I said, hey, did you take that long? And he goes, no. And he explained all of that. But then later I said, I had called him back and I said, are you trading? He goes, yeah. So it's my fault. I know he can't. If I put him in front of the computer, he's going to trade. But, one of the things, though, is you really got to take profit before the market takes it back. And that's part of making it, what makes it difficult. You might be up a pip or two. And once again, if you're trading a dime a pip, 10 or 20 cents doesn't matter. But that's the wrong mindset to have. You got to think this is a pip. That pip could be a $50 pip or a $100 pip. And if you go, oh, well, I'll do different. No, you won't, because what you do when you are lifting 5 pounds is the same thing you're going to do when you lift 50. You have to have that. You have to do it right with 5 before you move up to 50. So it's the same. It's the same as true in trading. You need to understand that. Interesting. I was trading right around that 75 level when I told on myself, and I was on my upstairs laptop, and I didn't have my normal trading screens up because I was testing those indicators out, and I didn't realize that we were breaking the previous week's low, because that would have been a nice short. Okay, from last night, I believe we were somewhere. I think we were somewhere around here. Where were we? No, we were somewhere around here. We were right around the opening day for the year, and as you can see, it's dropped off, and we even broke that low from Friday right there. NFP Friday. 86 pips below the yearly open, and you just kind of wonder how much further down it might go or if it'll crisscross above. And so this is a trade to be in, meaning price is going to range from that open. It pretty much has to. And if you can catch it just right, well, if you caught it, you're up 85 pips if you went short. And you can see 4 weeks ago we had an inside bar. There was the high of it. Price touched it first off. And you got some inside bar action coming up this week on a few pairs. Only 5 pairs over 100 on range, and they're all pound pairs. I wonder if there was some pound news out there. I don't know, and I don't really focus on news. In fact, somebody asked something about market manipulation. It's like, the thing is, trades are recorded, so you know whether or not, or where price has gone. Time for the green rats to feast here. So I don't concern myself with that. I really don't. Weekly pivot, 1.3312. Don't know if we're going to hit it or not. We took out the daily pivot. A couple of missed weeklies there. So, fellow traders, just keep those dots in mind if you like using them. And remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.